Let's tell people how to buy a house. Did
Dude,
rates
what's
get
up
better today or get worse?
What's up with this?
Dude, what's up with that?
We're par.
What up with that?
We're par with yesterday.
I saw the alerts come in.
Asada. Carne asada?
Carne asada, dude.
I love carne asada.
I do too.
Do you like chicken asada?
Oh, wow. We live fast. Look at that.
Sometimes you're fast, sometimes you're slow.
That's how it works in the loan business. So, got any good stories, man?
All right, guys, you are
Guys getting a house.
here.
I got one where the realtor got way too much credit.
Oh, that's weird. So you're here to get home loans, guys. We're going to talk about home loans. When he talks about credit, he doesn't mean a credit card. He means seller credit because we talk home loans right here. So if you have any questions about your situations or what you're going through or what you want to go through, if you want to buy a house, we are your source of information to send you down the right path.
KK's in the house. What's up, KK? Great to see you.
It's for you, girl.
That's for you. See that? He's got one for both of us. You got a heart for both of us.
Two of hearts.
No, it's two hearts. Never mind.
That's 1983, man.
That's crazy, man. That's
KK, where were you in 1983? I know where he was.
Straight crazy, yeah. So what's going on? The mortgage man just joined us, man. Shoot, we got another mortgage guy. What's up, mortgage man?
Another one?
If you're brand new here, listen, you might learn something. If you're an OG, drop us some guidelines, give us some hints. We're good to go, man. Let's do this thing.
There's more than one mortgage person on this group?
No way.
I thought we were the only two guys doing this.
No way.
Dang, she was 11.
She was 11. Blame it on the rain. So talk about rates. Pull up the rates. What do we got? So everybody always wants to know, what are the interest rates today? Where are they going? Are they up? Are they down? Or this? Here's the reality. Not great. Not great. The Fed dropped basis points, 50 basis points a little while ago. A little bit ago, and everything got better for a second, and then
what's up, sexy black?
Went back. Went right back up. So this is going to sound amazing, but it's really not that amazing. Here's what it is. If you went to the New American Funding website right now, you would see that a VA 30-year fix is coming in at 5.875. What? Yes, 5.875. You would see an FHA 30-year fix, 5.875. What? Sounds amazing. You'd see a 15-year conventional, 5.625. What? That's crazy. And then a 30-year fixed conventional coming in at 6.25. Now, here's the catch. By the way, if you don't believe these rates, go to the top of our link. Go to Cool Stuff, Today's Rates. You'll see what I'm seeing. I'm actually looking at the New American Funding website. This is not my offer to you. In order for me to give you an offer to lend, I have to pull your credit, calculate your income, check your assets, and build your file. Then I can give you an offer. But here's the catch with these rates. These rates are best case scenario. Like best case. Shocker, the banks put out the best case. Yeah, if you actually look into it, you're going to go, I'll teach you. Here's a little hack, by the way, for those who are not in the mortgage business. If I see 5.875 and right next to it, I see an APR of 7.091, something makes you go, What that means is there's costs in there, which is usually a buy down. So New American Funding is probably factoring a buy down. And if you look, they disclose everything. They're nice and buy the book. They'll make sure it's buy the book. But that's how it is today. And it's not that great. So go.
All right. For those of you that are interested in getting a home loan, go to the link in the bio, select apply for a home loan now. And once you're done filling out the application, make sure you call or text one of us, because when you do that, you get moved to the top of the list. If you don't do that, we're going to work you in order, and it might take a little longer, maybe a day more, whatever the case may be. Or if you have crappy credit, go to the link in the bio and say, fix my credit. So one of those two options is for you guys. When you're ready, let us know. On to the first question by the mortgage man.
What's up, mortgage man? Great to see you.
So I guess there's three of us.
Dude, well, first off, my name on the web is Lee Duran, the finance man.
That's
You're the mortgage man. Dude.
You two are the most creative people I've ever
in
met.
The world. Can you imagine what I do for a living? I'm in finance. Yeah, he's in mortgage. Cool. What's your opinion of the TD Bank lawsuit and reflection on rate increase? What is your opinion?
I don't know what's going on with the TD Bank lawsuit.
Here's my honest opinion. I think that I've been told that it's from TD Bank and it is a lawsuit. That's about all I really know about it.
Now look at your reflection.
Yeah. So rates, as you know, mortgage man, if you're new, I'll teach you. If you know, then you already know this. The mortgage rates are market driven. They are not dictated by the Federal Reserve. The mortgage rates are based off of the 10-year yield. What? Yeah. So the Federal Reserve sets what's called the prime rate. The 10-year yield has to compete with the prime rate. Usually in lockstep is going to be your mortgage rates. So there's a chart that shows, hey, the Fed has increased rates, so mortgage rates go up. They decrease rates, mortgage rates go down. So it is a market-driven situation. Here's how that affects. If the Fed sets a floor, which is right now 5.0, because it was 5.5, and they dropped it 50 basis points, so it's 5.5. There's a 100 to 250 basis point spread that the market will dictate. And sometimes it'll come all the way down, which it did for a little while.
You got it, Ryan.
And then when things go down, when things go bad, like they're going right now, the market's freaked out because we don't know what's going to happen. They're freaked out. So you're pushing that 250 basis point spread on the basis point spread. So it's market driven. Anyway,
so all of your questions that are flying in right now, we're going to get to every single one of you.
Every single one.
Hang in there. I got a better question, though, for the mortgage man.
What?
So TD, guilty of money laundering, whatever. I don't know all the details, okay? I'm not going to pretend like I know. But my biggest question is, there's a $3 billion fine. Where's that money go?
No, where's it come from?
Okay, no, it comes from the bank.
No, it doesn't come from the bank.
It comes from the money that they stole and laundered and all that stuff.
Yes, it comes from the customers.
Where does it go?
Oh, it goes back into the bank.
Where does it...
It goes back to the Federal Reserve so they can lend more money to the bank. It's a giant... Hey, listen.
Is it its own Ponzi?
Dude, it's a giant scam. The whole world's a freaking scam. But when you get into finance and you really peel back the onion layers, you realize there's a gigantic scam. But here's the catch. You don't really have an alternative unless you're independently wealthy. Then you're like... Because you know what? You got to live somewhere. You got to eat something. You got to drive something. There's a lot of things that you need in this world. Or you can live in the mountains. But even then, they're going to hit you with property taxes.
Yeah. So, mortgage man, where does $3 billion go? Maybe you can answer that.
Yep.
Armo Crash Out. How common is an 80-10-10 mortgage for a multifamily nowadays?
Not days. Probably very, 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 very rare. Why? Because, first off, an 80-10-10 says inside the definition that it's going to be a conventional loan. And that you don't want to pay mortgage insurance. And that you're going to put 10% down. And you're going to have a second on that. Now, what's going to be triggered is you're going to need reserves. You're going to need to put 10% down and then a whole boatload of reserves because you didn't qualify on your own. So, how common is it? Not very common. Most people don't even know how to do them. They don't understand them. So, is it common? Not common. Is it doable? Yeah, it's doable. It's absolutely doable. Yeah. The scenario has to be right. I get people like, hey, you know what? I heard this USDA thing. I can go zero down. So I want to buy a house right in the middle of Los Angeles using the USDA loan. I'm like, yeah, you kind of don't understand that. They're like, why not? I'm qualified for the USDA loan. I'm like, it doesn't qualify the borrower. It qualifies the property. Well, let's make sure that property qualifies. It doesn't. If it's in Los Angeles, it doesn't. If you go to Palmdale somewhere, which is about 100 miles outside of Los Angeles, maybe, and it's very rural, maybe.
Like, that's what I meant, Los Angeles County.
Yeah, that's what I meant. Yeah. So, 80-10-10 does work, but it's very, very rare. If you want us to pull it off, we can pull it off.
Ryan, I appreciate you paying attention, my man.
What?
Because Ryan said, why did mortgage rates go up while Fed rate is dropping? And he said, never mind, you just answered my question. Because Lee went on an 18-minute rant about it.
18 minutes, that's how I do.
It's all right, though. We like it.
All
Crystal,
right.
how does the IRR, missing one more R, RL program work with the VA? Do you guys help with that program?
Crystal, boom! Yay, thank you for your service. Appreciate it very much. Do you know how I know you're a veteran? Because the only one who talks about VA IRRRL loans are veterans. That's it. Here's what it is.
I talk about them and I'm on a vet.
Good point. Yeah, he does talk about them. He does a lot of them, actually. He's pretty good at it. Anyway, thank you for your service.
And those hearts.
Crystal, dude, hearts. I appreciate
Keep them coming, guys. It helps
Thank
the
you
algorithm.
very much. So, Crystal, here's how it works. It's very simple. The VA gives you an interest rate. Actually, the market gives you an interest rate. The VA insures the loan. So, they give you 7%. And you're like, hey, rates went down to 5%. I would like to get a 5% loan. Here's how the VA looks at it. It's very simple. They say, hey, have you been making your payments on time? That was $3,000 a month. And they look and they do a VOM, verification of mortgage, and we go, yes, you have. Cool. If you're paying $3,000 a month, well, then you're for sure going to pay $2,500 a month. So we don't need a lot of documentation. No, almost none. You can't get any cash out. You can't pay any bills off. All we're going to do is decrease your payment from $3,000 to $2,500. There are costs. If your loan officer tells you there's no cost, they're lying to you. There's always cost. It gets built into the loan, but it's a lot slimmer cost. Why? Because I don't have to do an appraisal. I don't have to do an income check. I don't even care about credit. As long as your VOM came in good, verification of mortgage, as long as you paid your last 12 months on time, I don't even care about your credit. All I care is, did you pay your last 12 months on time, and is this going to be better for the veteran? That's it. That's how a VA IRRRL works. It's the easiest loan in the business. However, there are rules on it. You have to wait 210 days from the first payment. Not from closing date, not from when your first payment was due, from the day you made the first payment. And you cannot get a VA IRRRL till then. And it must pass something called the net tangible value test, which means, is it worth it to the vet? Because it's going to cost $3,000 into the loan. If it's not worth it to the vet, they don't allow it. Very simple.
ANSU. Will my property tax go up if I order an appraisal to remove my private mortgage insurance?
So, that's a good question.
Yeah. So first of all,
you go.
First of all, let's talk about PMI. Okay. PMI means that you bought a house putting less than 20% down. Okay. I don't care what loan product you're going with. If you put less than 20% down when you're doing regular conforming, regular houses and regular land, not mansions in Beverly Hills, it's going to have something called mortgage insurance, which is an additional premium that you pay per month to get that loan. Now, once your values have gone up enough, you can refinance because they'll take in the new value with the appraisal with your new loan amount, which will open up that 20% or more equity to remove the mortgage insurance.
What?
Okay? That's what ANSU was asking. Now, the question is, will my property taxes go up? Now, there's one big instance where your property taxes absolutely go up, and that is change of ownership. Change of ownership. If you're changing ownership, they will go up. If someone's buying that house and it wasn't theirs before, they've changed the ownership, it will go up, and they're going to go to whatever the current tax base is. But if you're doing just a regular refinance and you're not changing ownership, you're not moving stuff around, you should be fine.
Yep. And they go up every year anyway, by the way. They go up every property almost every year they go up, except when the market crashes.
That's the way you say it.
Except when the market crashes. It did crash in 2008, and there was adjustments down, but the property taxes go up by and large all the time.
All right, the mortgage man come on with some data. Exactly, but our mortgage analysis meeting yesterday referred to an impact due to TD Bank being number 4 on mortgage-backed securities.
Okay, so mortgage-backed securities, it's a strange situation. It's reason that everything crashed. Like, for those of you who are not in the mortgage business, here's what it is. Let's say a bank funds 1,000 loans, okay? Inside of that 1,000 loans, they're like, hey, you know what? We got some A paper, which are 800 FICOs, and we got some C paper, which are 580 FICOs. Cool. But if I put the whole thing together, this is not going to default very much. Very much is the key, and this is where it gets weird. So they put it all into one package. That's called a mortgage-backed security. Then the stock market sells it as one unit. They say, hey guys, instead of trying to invest in real estate, why don't you invest in the mortgages that's backed by real estate? And they don't really have all the data. You have to really understand this stuff in order to figure it out. The reason the financial market collapsed is because they were kind of lying and saying, hey, this is an A-rated mortgage-backed security, when in fact it really wasn't.
Talking about tranches?
What? It was a D-rated mortgage-backed security. In fact, anybody who could actually do numbers understood that this was going to fail. They understood. There's actually a movie on it called The Big Short. It's a good movie too. So if you watch that movie, you'll understand this situation. And when the big banks do this kind of stuff, it can affect the market. It can. Theoretically, the liquidity tests make sure that it can't hurt the market, but it can affect the market.
It can affect the market. Steve said George Cruz, I don't know who that is, do you? By 470% and conventional loan. What does that mean? Who's George Cruise?
Probably brother of Tom Cruise, but he's not very famous, so people don't know who he is.
Maybe the uncle of Ted Cruz.
Could be the uncle of Ted Cruz. Ted Cruz is in trouble right now. I hope he wins, but he's in trouble right now. I don't know if you know that.
It is what it is, man.
Yeah, it is what it is.
Omar, I have 6.2 interest. What's a good time to refinance to lower my interest?
Omar, this is going to be a tough one. Here's why. Because I'm going to tell you, if you have a 6.2 interest, the time it's good to refinance is when that rate is lower. That's it. Now, if you priced it...
That's a fact.
Yeah, that's a fact. See, that was good, too. It was like clean cut, right
That's
to the point.
when.
Yeah. So if you're looking for a time frame, don't know. My crystal ball doesn't work very well. Yeah, I figured that out. It doesn't work very well. However, I can tell you what the Federal Reserve is saying. Federal Reserve is saying right now we're at 5.0 interest rates, 5.0 Fed funds rate, 5.0 Fed funds rate. And they anticipate reducing Fed funds rate all the way down to 2.5%. When? 2026. 2026 is where this goes out to. And it adjusts all the time. You can see this on your own. Go to the FOMC website. FOMC is Fair Open Markets Committee. It's the Federal Reserve. And they dictate the cost of funds. So, currently the rate's 5.0. And they are forecasting that it's going to go down to 2.5%. What does that mean in English? Usually, mortgage rates hover between 100 and 250 basis points above the Fed funds rate. So, if it goes down to 2.5%, we're looking at 3s, 4s, somewhere in that range in 2026. Now, if you're talking to your loan officer is going to go, hey, we're down 75 basis points. I think it's a good idea to refi. And why? Because they'll make $15,000 every time you do it. They want you to do it 3 or 4 times on the way down. If you're doing it by the numbers and correct, you wait till it goes all the way down to the bottom. You refinance once, you buy that rate to the bottom, and then you never touch it again.
Ever.
But that's like eating perfect and exercising. Very few people do it, even though they know it's the right thing to do.
There you go. All right, so anyone interested in getting a home loan, go to the link in the bio, select apply for a home loan now. We're going to get to every single one of your questions, guys. There's a lot of questions in there today, so please hang in there. Steve, 5 or 10% on conventional loan?
Yes, absolutely,
I don't
Steve.
understand
no
what
question.
you're saying, Steve.
Yes. No, just be the yes man. Dude, say yes.
I don't understand.
It's so much better when you say yes. Do you want a 5% conventional loan? Yes. Do you want a 10% conventional loan? Yes. Do you want to pay 5% on the interest rate? Yes, I can make that happen.
Are you really 5'5"?
So you want to pay 10% on the interest rate? I actually don't think I can make that happen on conventional because there's rules on that. But can you do 5% on a primary residence? Yes. Can you do 10% on a primary residence? Yes.
Armo, thank you for the love. User 7387, I bet Lee voted for Harris.
Yeah, you're right. Take a look at that. This is the Size Matters.
What did you do to
MAGA
our fans?
hat. Well, you're wearing a MAGA hat.
Why did you make our fans mad?
I don't know.
Why did you piss them off?
I don't know, man.
Scotty Two Stacks. I like that name.
Two Stacks.
GA, I think is Georgia. 42K retirement, no taxes, no DTI. No DTI. 795 credit. What kind of loan amount? No home in last 3 years.
42K right now in this market is not a good market for you.
Well,
it's
Georgia.
not. In Georgia, you might be able to find something. But 42K, what do you think 42K will get you?
I'm going to go ahead and say that 42K is going to get you about 250 on the high end.
You think so? I got to find my chart, man.
Find your chart. Dude, it's been so long.
I know.
Scotty,
I got to find my chart.
Good credit, though, man. I love that.
Good credit.
No DT, no debt.
I'm going to say
like
180 to 220, somewhere in that range. Okay. 180 to 220, somewhere in that range. Yeah.
So guys, co-signers are key.
Yeah, if you can find a house in Georgia and wherever you live in Georgia, if you can find a house for 180 to 220, give us a call. Let's make it happen. If you're living in Los Angeles, not gonna happen.
Yeah, and what kind of retirement do you have? Because some retirements.
Oh, dude, I missed that. What? You just slid that in there.
I'll feed you, bro.
Dude,
I'll feed you.
He's trying to give you a raise. Scotty Two Stacks. He's trying to give you a raise right now.
Doing my best.
He's doing his best right now. So 42,000. If you have certain types of retirement income, like let's say you have VA retirement income or even VA disability income, I can increase your amount by 25%. I happen to know that 42K is what the average veteran receives if they're 100% service connected. Then you can actually bump that up 25%. So you make more like 56, 57K, somewhere in that range. And that gives you a heck of a lot more buying power. So, Scotty, we need to know a little bit more.
Yeah, and there's other retirements we can gross up to. KK said, I want you guys to know that I think you guys are so amazing.
Appreciate you, KK. We think you're amazing too.
You're amazing.
Yep.
Armo Crash Out. Thanks for answering. I was reading a book from 2005 and learned about it back when it was easy.
Back when it was easy. Which part? I forgot the question.
I just read. Okay. Oscar Puga. Do you guys help with FHA payment assistance in New Jersey?
All day, every day, Oscar.
We love
Oscar.
New Jersey.
Every day, all day, every day. I'm going to give you a crash course on it because I think a few people want to know about zero down. Here's how it works. First, we qualify you for the FHA loan. FHA loan, we got to get you qualified and make sure that you can actually do an FHA loan. Second, the programs plug into the FHA loan. So like there's a big one in California called CalHAFA. I have to qualify you for CalHAFA. The minimum requirement for that third-party program is 640. 640? 660.
660 is going to be
660. 660. CalHAFA is going to be 660. So even though you qualify for FHA at 580, you don't qualify for the CalHAFA that plugs into the FHA till you have a 660 FICO. And that usually kind of sends people back a little bit. Now, there are other programs that we have are national. We have a New American Funding Program. It's at 640?
660.
660. Back to 660. So the question becomes, can you get into a CalHAFA loan for 580 FICO? Yes, you can. Yes, you can. Can I get down payment assistance? Nope, ain't going to happen. So there's your answer.
Vance Archuleta. Right now in pre-approval process and an underwriter is looking at our information. What does it mean?
That means your loan officer don't know what the hell they're doing.
No, it's the process. It's the process.
Nah, maybe.
So what does an underwriter do? I think that's the question.
Okay, so
what does an underwriter do?
So here's what a loan officer does, then an underwriter, and then what a processor does, okay? So a loan officer, I pull your credit. I'm legally licensed. I have to take a thumbprint. I have to make sure the FBI knows I have no moral turpitude. And then I get all your financial data, like all of it. I need to know what you did for the last 2 years. I need to know what this large deposit is. I need to know where it's going and why it's coming in. That's none of your business, Lee. Yeah, it is. So you'll send me your last 2 year taxes. I'll pull your credit, and then I'll look at your bank accounts. And then once I look at all that, I plug it into some software. In my case, it's called Encompass. And then I run what's called DU. That's Desktop Underwriter. And I'm looking for Approve Eligible. So in the world, it's DUAE. So if I put the data in perfectly and I trust the data, I'm going to spit out a DUAE and say, hey, you're qualified for $400,000. That's what a loan officer does. Now, if I put it in and I go, boom, I'm getting a refer eligible, which means there's something wrong. Something's not lining up. Oh, but this person works by the numbers. Okay, I'm going to have to send this to underwriting because the underwriter is going to dig in and find out if this loan can go or if it can't. Because based off my knowledge, you're meeting the debt to income ratios, the loan to value ratios, you've got the assets in the bank, you've got the reserves, you've got everything. But for some reason, the software is saying, no, you can't go. It's saying, no, you can't go. If that happens, I call my client and say, hey, listen, I've tried 15 different times. It doesn't work. I actually have my manager try. I've had my business partner try. It doesn't work. I'm going to send you to underwriting. Why? Because I believe your debt to income ratio is good, your loan to value is good, your assets are good, your reserves are good. I think I can make this work, and I'm going to ask the underwriter to override the computer. That's what it means if you're in underwriting before you're out shopping.
Yeah.
That's a lot, huh?
Underwriter's just going to make sure you meet the guidelines. That's all they're doing.
No, that's a short version.
That's all.
Yeah.
That's all. See, could have answered it in 3 seconds.
Yeah.
User 7120 can't afford anything in California with $65K a year.
You cannot, user.
It's tough.
Even if you were in Barstow.
It's
Barstow's this little tiny town, like out nowhere, and it's like it's a little hick, but not all the way hick, but kind of hick. You still can't afford anything.
Yep. Brianna Monet's on the same page. It's
What's
tough.
up, Brianna Monet?
Vision 2014. Are most lenders knowledgeable on non-arm's length deals and gifts of equity?
Most lenders are not knowledgeable about shit.
If you're talking about the big pie,
let me tell you something.
He's correct.
The most loan officers, they pass the test. They're like, hey, do I get my $250,000 years yet? And
where's my Lamborghini?
They really do not know the system. They do not know the underpinnings of the system, what drives the system. Most of them don't know anything. And you can find that once you test them. I tell my business partner, I'm saying, hey, listen, if you get into the ring with the UFC champion, really quickly you'll figure out you don't know anything because the minute you try something, he's going to correct you. Same thing happens in the loan business. That real brushstroke of, hey, I can do things. Yeah, that first brushstroke goes away real fast as soon as you get tested. So Do most know about arm's length deals and gifts of equity? No! No, they don't. No. There are a few that are great. There are a few that are amazing. Those are the ones you want to go with.
Yep. And we've done a bunch.
Yep.
Dewey-O.
Look at that. That's kind of cool.
That's
Play
you
with
and
the
me.
names. Yeah.
That's you and me. 1099 first time buyer on or some 1099 first time buyer or some 55K department, 600 to 6,000 per month. Can I do it?
How long have you been 1099 and is the 55 net? If you've been 1099 for 2 years and wait a minute, if you're 5 to 6 per month, that's gonna be
60, 50,
yeah. But
60?
why is it getting 55K on? If I'm getting 5 to 6, what am I not reading it? Deposit, 55K deposit. Is that what that means? 55K deposit down payment. So it's going to depend on, do you have 2 years of 1099? Is it net? And that's the biggest factor right there. And what's your FICO score? So with what you gave me, can't answer that, but I can tell you that I can dig in a little bit deeper. And it may be yes, but your FICO score will drive everything, and whether or not you paid taxes on your income.
Yeah.
That's a big one.
So 55K deposit, $6,000 a month. You got a good chance. A great chance.
Yeah.
2-year history is a big deal.
2-year history and FICO score.
Reese, rates have went up a lot since September, but read that a guy is cute. Oh, but red hat guy is cute.
Dude,
Poppy.
you got yourself another.
She stopped me in my tracks.
I know. He's like, you made him nervous. He's all sweating.
She wants me to call
He's
her
like,
Poppy?
Dude, call Poppy.
Poppy?
What's up, Poppy?
How you doing?
What the? All right.
Dewey-O, I also have a 710 credit
Oh,
score.
there we go. 710 opens
You're
a lot of
gold.
doors. Yeah, that opens a lot of doors. What I'd have to see if you're 1099 is I'm going to need your Schedule C's or your Schedule A's, and we're going to have to figure out what your actual net income is. Because there's the idea what you think is income, and there's what's really income.
Yeah, Brianna Monet back. So shouldn't we wait till 2026? I got to pay off debt anyway.
Brianna, if you can wait, because here's what's going to happen. Let's just say you're at 8%. You're like one of the worst mortgage rates out there, and you're paying $4,000 a month. And then your rates go down to, let's call it 5.5, and your loan officer calls you up and says, hey, listen, it might be a good idea to refinance. You're like, no, I'm going to wait till it goes to the bottom. Just, can I get some numbers? Oh, sure, absolutely. Hey, if you refinance today, you will save $600 a month. And you're like, $600 a month? Yeah, it won't cost you anything. I'll even get you to skip 2 months. Wait a minute, I won't have to pay $5,000 for 2 months. Did I say $5,000? I think so. $5,000. I won't have to pay $5,000 for 2 months? Yeah, that's $10,000. You weren't listening. All right, so I won't have to pay $5,000 for 2 months, and I'll save $600 a month? Yeah, I think it's a good idea to do it right now. And there's a case for that. Now, here's the other part of the math. You have to start the 30-year clock over, and you have to factor in all the closing costs. So there's a way to do it. There's an actual way to do it. So should you wait till 2026? Sure. But is it going to be tempting to refi before? Absolutely.
Well, here's what I recommend, guys. And I recommend this to everyone who's thinking about buying a house.
Everyone?
Get pre-qualified.
Yeah.
See where you stand.
Yeah.
See what it looks like today. And if it doesn't meet your needs, we can give you the proper adjustments that you need to do in order to hit your goal.
Yep.
So get pre-qualified.
Get
Solve the
pre-qualified.
challenges ahead
Do
of time.
it.
Dewey-O back in the house. And I also have a 710 credit score. I do not down payment needed assistance. All right, that's the 55K deposit then.
Yeah, the 55K helps you a lot, but if you don't have good income, the loan will fall apart. A lot of people come in going, I have this one guy who like literally won millions of dollars. Client of mine, friend of mine, won millions in Vegas. Like million. One day he was sitting blackjack, put $1,000 or $5,000 on a hand. Crazy. But he did it. And then they said, all of a sudden security surrounded him. He's like, Lee, I freaked out. I didn't know what the heck was going on. I won a couple $1 million. I said, amazing, dude. Awesome. Cool. He's like, cool. I got $2 million in my bank right now. I want to buy myself $1 million house. I'm like, cool, you're going to pay cash? He goes, no, I want to finance it. I'm saying, cool, what's your income? Didn't change his income. He couldn't qualify for $1 million. He could not qualify for $1 million. What I actually did with this client, I said, hey, listen, you don't have the income. But there's a guideline that lets me use what's called depleting assets. So we put $500,000 into a SPIA, single premium immediate annuity, and then we gave him a stream of income of $10,000 a month for the next whatever, and 50 months. And then with that, the underwriter said, yes, as long as I have X amount of down payment and $500,000 SPIA'd out. We were able to do it, but he didn't have income. So it's all income.
Made it happen. RH102 wants to know, are you guys related?
No,
He's
not
my
even close.
grandson.
He's my grandson.
He's my grandson.
Yeah.
Time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by calling the numbers on the screen. But don't call right now because we won't answer. We're on TikTok, Instagram, Facebook, and YouTube. We can't do it. But after we're done with this, give us a call, text us, and we will help you with your loan. This will disappear in 5, 4, 3, 2, 1, bye.
Great job, grandson. Scotty Two Sacks says he's on Social Security and a Nabisco pension.
Social Security is gross up a bowl.
Yeah, Social Security can help you.
Yeah, and Nabisco pension may be gross upable. Maybe. So we might be able to get you 25% more than what you said. Is it possible? Maybe.
What city and state are you in, Scotty Two Stacks? Actually, I want to know where all of you are at. City and states, guys.
Yeah.
City and states. Sebastian's back in the house. When can we talk today in regards to possibly partnering up? Credit repair, client related. This is the guy from yesterday who said he had clients that he does credit repair for.
Oh, cool. Give us a call.
Just call us, man. Don't be a stranger. Don't be scared.
Don't be scared.
Just call.
Don't be scared.
Not right now.
Dude, not right now. Yeah.
Zion Marketing.
I was nervous.
I was.
Yeah, a little nervous, yeah.
Zion Marketing. I was late on some payments this year. Can I get a VA loan?
Zion Marketing. Dude, marketing. You're late on some payments. Sounds like you're about to. Zion was from Matrix. Dude, Zion.
Thank you for your service, Zion.
Zion. Can I get a VA loan? Maybe. Maybe VA is the most forgiving of all the loans. Do you know why? Here's why. Because you served our country, the Veterans Administration steps in and says, hey, listen, Mr. Bank, if you give my veteran a loan and he defaults, I'll write you a check for 25% of it.
Boom.
So if it's $400,000, Mr. Bank, I'll write you a check for $100,000.
Man, your math is spot on.
It's spot on, dude. It's spot on. Write you a check for $100,000. Now, the way the bank looks at it is, hey, listen, if I put this veteran in a house for $400,000 and I have to foreclose on him, I'm gonna miss 4, 5, 6 months of payments. I'm gonna repossess it, and then I'm gonna put it back on the market. But I'm gonna have to fix it. It's gonna cost me $50,000, $60,000 to do all that. But the VA is willing to write me a check for $100,000. I don't have a lot of risk in this. Because of that, the underwriting is so much easier on VA loans. So if you were a regular Fannie Mae, Freddie Mac, FHA, I would say that's tough. But on VA, there's a lot. We can do a lot.
All right. EO said I left a message, I think, for Lee. He might need some help and needs to be informed. Dude, call him back.
I don't know what that means.
It means he called you. He left you a voicemail.
Did you leave a message on TikTok or Instagram or Facebook or YouTube? Because I check those sometimes, not often. But if you texted me, I call you back right away. I text you right away.
Text him.
Right away. Text me.
Artie Sanders, Oklahoma, $150 a year.
Damn. What do you do?
Buy the state.
You could buy the whole state.
Holy
or a governor.
hell,
Shit,
Artie
governors
Sanders?
are cheap these days.
Artie Sanders, what do you do for a living?
Yeah, what do you do for a living?
And don't be single because they're gonna slide in your DMs.
Yeah, they're gonna be like, hey, here's a guy who makes $150K in Oklahoma.
This dude buying a mansion. EO back, $55K on a car loan, first time buyer, 700 credit, each year more, $72K per year. 1099, 5.5 years. That's good fun.
Yeah, 5.5 years. If the $72K is what you actually paid taxes on, then you're sitting pretty good. That can do something. $55K on a car loan though, that's got to be rough because that's $1,000 a month, right? $1,000.
That's a nice car.
Yeah, that's a nice car. That's a nice car payment too.
You might have to sleep in it.
Yep.
William Embersoul. How hard is it to get a mortgage with the newly discharged Chapter 13?
Okay, so here's the textbook answer. It's easy. Here's the real answer. You got to call the court. The court has to give you the paperwork stating that it's okay and you've made your payments on time with a discharge Chapter 13. I can do it even while you're in Chapter 13, the day after discharge. I can do it anytime during the Chapter 13 with court approval. That's the key. It has to be court approval. The guidelines say, oh, I can do it anytime, but we've done them. We've tried them. And we need a letter from the court, and the court has to say, this person is now financially stable and able to get a loan for X amount. The court actually dictates a big part of this.
Freaking court. He's out of Tampa, Florida.
What's up, Tampa, Florida?
Hey, were you Tampa? That was hit by the storms, right? Tampa?
Dude,
am I wrong?
Dude, he's probably outside in the sun because there's no roof there anymore.
I hope
dude,
not.
I'm praying for William,
Dude,
man.
William,
I am praying for William. I'm praying for William right now.
He also may not have been affected.
Right.
So. Actually, he said yes, sir. He said yes, sir.
Okay, cool.
So how's everything down there, William? With the storms have passed and all the problems that still exist, you guys have electricity. What's going on?
And do we love DeSantis or what? Do we love DeSantis or what? See the red hat? See that red hat?
I love him from
the
California.
Shirt? See the shirt? Yeah. Anyway.
All right.
KK, send another rose. We appreciate you, KK. Thank you for the roses.
And how many flowers have you given KK?
You know what? I haven't given KK any flowers.
That's
We need to get KK some flowers.
That is rude.
You know what? I make 2K. Check 800 cash week, 720 credit Cali. I make 2K check 800 cash.
Oh, 2,800.
Oh, 2,800. Okay.
800's in a check, 800's in cash.
All right, cool. Cali, that's really cute, but you're not going to do anything in Cali.
That's a decent income. That's what, 10, 12 grand a month? That's 10, 12 grand a month.
2K, 12 grand. Oh, yeah, 12 grand a month. Yeah, 12 grand a month. You're at $500,000?
Dude, you can buy a house.
Yeah, you can buy a house.
Why aren't you calling us?
Right now. You should be calling right now. No, not right now. You're smart. You need to wait till after we're done with the live. Then, user 4483, we got you covered.
That's a good credit, and that's good money. You can buy a house in California, bud. Call us, text us, whatever. Or go to the link in the bio, select apply for a home loan now, and just start the process.
There's some people that don't want to talk to us for some reason. They just fill out all the paperwork, and then we just qualify the loan, and we say, hey, you're qualified. Cool, can I start shopping this weekend? Yes, would you like to have a conversation? Only if we need to. I don't need to. I'd like to meet you, but no.
Duo, 55 car, new Tundra. That's why.
$925 a month.
New
Dude,
Tundra.
that hurt you bad.
We called it.
Yeah.
Nice car.
Yeah.
$1,000 a month.
That hurt you bad. Here's what it did to you. So if you were making $5,000 a month, that took out $2,000 of your income. So you now make $3,000 a month. That's reality. Yeah, that hurt.
But let's pre-qualify you, man,
let's find out.
So we can make it work. Well, everything's back to normal. Good, William. We're happy.
Cool, yes.
FZ, what are the rates now? I got an FHA 6.2 about a year and a half ago, looking to possibly refinance.
FZ, not gonna be good for you. Not gonna be good for you. Is that 6.2? FHA it is 1.5 years ago. So I'm gonna tell you what the numbers are based off of the New American Funding website, because they put out their best numbers and the perfect scenario, and then I'm gonna tell you reality. So if you went to VA website right now, you would see VA 30-year fixed 5.875. You would see FHA 5.875, which in your case sounds amazing. Then you would see conventional 5.625. What? Yes. And then your 30-year fixed 6.25. But here's the reality. If you're doing an FHA, you are doing what's called an FHA streamline, because you're going from FHA to FHA. You did it a year and a half ago, and you got an FHA, which tells me you probably put 3.5% down, or not a lot down. And you don't have enough appreciation in order to do a cash out refi of any type, because the market has not appreciated that much in the last year and a half, which means the only thing you're eligible for is an FHA streamline. And if you're at 6.2 and I price an FHA streamline, it would probably come in at 6.5, which means you're not even close. It's not even close in this moment. Now, that could change after the election, after we get a new president, which isn't that long from now. After the election, after we get a new president, that could change a lot. But recently, because of the uncertainty in the markets, and I believe largely because of the elections, rates have skyrocketed up. I locked one yesterday or 2 days ago for 6.99. Great credit score, great down payment, 6.99. That's the reality of the world.
Yeah, user 4483 said I don't have any debt. Good.
Congratulations, user 44.
Thank you for the love, William. X-Lax. 110K a year. I don't know how to say that. 110K.
Is that Jax, though? I don't know.
X-Jax.
Don't be throwing lax on them, man.
Well, it's LAX at the end. That's what I read. Sorry, I don't know what it means. 110K a year with the 750 credit score. Is it possible? It's not only possible, man. You can do it.
That's probable for you.
You can do it.
Yeah, that's probable.
That's an easy file. I love that credit. Great income all day long, every day.
Yep.
Do EO back in the house says got a new Tundra because my other car got totaled from an accident, needed transportation.
Yeah, you should have gotten a Tercel.
Yeah, I would have said, hey, hold off on the Tundra.
Yeah.
Get your Corolla.
Yeah.
Get transportation.
Yeah.
Buy the Tundra after.
Yep.
Just because you can afford it doesn't mean the bank's gonna lend it to you.
Dude,
that's the problem.
I got me a new Lamborghini because my Camry got crashed.
That's not a good move.
Yeah.
Unless you're independent and wealthy. Well, who was driving a Camry forever? Was it who's the big investor guy? William Berkshire? Wasn't he driving a Camry forever?
Well, the biggest one that we know is Sam Walton, who drove a '84 Ford F100. Even though he was the richest man in the world, he drove that.
I think it was Berkshire Hathaway.
Was
that
it?
The Camry.
That's, oh yeah, it is. Yeah, that's
What's
right.
his
That's
name?
right. Warren Buffett.
Warren Buffett.
Yeah, Warren Buffett. Dude, I love the Toyota Tundra. I do. That's a badass truck. That's a badass truck. I'm not gonna lie. That's a badass truck. But you need to plan it. And if your house, it's like, hey, let me see. Do I want a house or a really nice truck? You know what? Truck.
Mm-hmm. We see it all the time, guys.
Yeah,
we see
all the
these
time.
young guys and girls that are out there making a lot of money. They're real young. They buy their badass vehicle, but now they can't buy a house. But if they wouldn't have got the vehicle, they would have a house and just buy the vehicle after.
Yeah, the vehicle people don't give a shit.
What?
Anyway,
the beautiful people?
the vehicle people, the beautiful people. Yeah, the beautiful people don't care. The vehicle people they don't care. They'll fudge the numbers. They don't have underwriting like a house does.
We got a fix here.
Uh-oh.
My wife works as well. I might have to put my daughter to work.
That's it, man. If you got multiple borrowers, it's same formula. I have to pull the credit, calculate their assets, calculate their income, and then their liabilities, and then we create a file. We have done, I'd say 40% of our files have 2 borrowers or more.
Yep. All right, guys, if you're interested in getting a home loan, you know where to go. Go to the link in the bio, select apply for a home loan now. If your credit is crappy, click on the button that says fix my credit. You guys know who to call, so I'm going to give you a couple of seconds to screenshot this so that when your guys are ready to buy your house, you know who to call. We're your loan guys, and you ready to hit it, man?
Did we get banned on that one? We didn't get anybody
No,
on.
just
That's
no
just
traction.
strange.
Yeah.
Really?
Yeah, I don't know what.
Hey, you know what? We appreciate you guys. We thank you very much for tuning in. We hope you gave you some value in buying a house. If you got any questions, give us a call. We've been Chris and Lee. We are out.